Hello money makers. Welcome to today's top 5 market updates. Our first update is from the U.S. Federal Reserve with Chairman Powell testifying to the U.S. Congress. Powell testifies at 10 a.m. Eastern Standard Time. Powell will testify via video conference at 10 a.m. Eastern Standard Time Tuesday before the Senate Banking Committee. Lawmakers will pose questions following Powell's opening remarks. The appearance is connected to the Fed's semi-annual monetary policy report to Congress, which the central bank published June 12. Federal Reserve Chairman Jerome Powell will deliver a cautionary message about the U.S. economy and COVID-19 when he appears twice this week on Capitol Hill. His remarks to lawmakers are widely expected to echo the mostly downbeat assessment he gave June 10 after policymakers held interest rates near zero at a two-day meeting and signaled they'd probably stay there through 2022. His performance, which highlighted the hardships faced by millions of Americans who've lost work, drew criticism from a White House official for being overly negative. Next up in the U.S. session is some economic data, with May retail sales expected to record a sharp spike up. U.S. retail sales likely experienced a record rise in May as 2.5 million Americans went back to work, although any rebound will retrace only a fraction of the historic drops in March and April amid the coronavirus lockdowns. The monthly report, due to be released by the Commerce Department on Tuesday, is expected to show overall receipts at U.S. retailers jumped 8.0% last month, according to a Reuters poll of economists. The U.S. economy dropped into recession in February as the viral outbreak brought a record-long expansion to an abrupt end. Employment fell by about 22 million in March and April, but payrolls rose unexpectedly in May by just over 2.5 million, supporting the thesis that consumer spending may be recovering and that the worst of the downturn may have passed. The likely sales rebound was probably led by strong auto sales as the relaxing of lockdowns across the country allowed car dealership showrooms to reopen. May's sales rate climbed above 12 million vehicles per year after dropping below 9 million in April, according to Ward's Intelligence. In news from the energy markets, oil prices are down over corona resurgence fears. Oil prices dipped on Tuesday on jitters that a rise in coronavirus infections around the world could hurt fuel demand, but hopes that production cuts could be extended kept declines in check. Oil prices rose on Monday after the United Arab Emirates energy minister expressed confidence that OPEC+ producers that have not been in full compliance with agreed cuts would up their game. There were signs that oil demand was increasing as countries eased lockdowns in some parts of the world. The Organization of the Petroleum Exporting Countries and Allies, including Russia, a grouping known as OPEC+, agreed this month to extend production cuts of 9.7 million barrels per day through July. They also called on members that have not been complying to make up their commitments with extra cuts later. U.S. shale producers are also cutting back on drilling amid the collapse in demand for oil. Production from 7 major U.S. shale formations is likely to drop to close to a 2-year low of 7.63 million barrels per day by July, the U.S. Energy Information Administration said on Monday. In news out of Japan earlier today, the Bank of Japan has announced massive support to stressed companies. The Bank of Japan kept monetary settings steady on Tuesday and stuck to its view that the economy will gradually recover from the coronavirus pandemic, signaling that it has taken enough steps to support growth for now. However, it increased the nominal size of its lending packages for cash-strapped firms to $1 trillion from about $700 billion announced last month. While the BOJ remains focused on steps to ease corporate funding strains, Governor Haruhiko Kuroda may offer hints on how it will deal with longer-term issues such as how to fire up growth and inflation when the pandemic begins to subside. The central bank also made no major changes to its program to ease corporate funding strains, including a lending facility aimed at channeling funds to firms. Due to the way it is designed, the amount of money to be pumped out via the program will reach $1 trillion if more loans are taken out via government schemes. Our final update for today is on improving U.S.-China relations, with U.S. and China both set to allow 4 weekly flights. The United States and China will each allow 4 weekly flights between the two countries, the U.S. Transportation Department said on Monday, easing a standoff on travel restrictions in the midst of the novel coronavirus pandemic. The U.S. government still hopes China will agree to restore full U.S. flight rights under their bilateral aviation agreement, the Transportation Department said Monday in its revised order on China flights. Following China's agreement to allow 4 U.S. flights total, Delta said it would operate 2 flights to Shanghai from Seattle next week and once weekly flights from Seattle and Detroit beginning in July, all via Seoul. U.S. said it was aiming to relaunch service to China in the weeks ahead. Chinese authorities have already agreed to some changes on requirements for U.S. carriers, including allowing temperature checks to be done before flights take off for China. Thank you for watching. Subscribe for regular updates. Only on Capital Street FX.